And first of all, let's get your thoughts on the slide of the Naira. Like I said, it's lost almost a Naira over the last week. What are your thoughts on the reasons for this?
Wally, good morning. We've seen the Naira move from a 56 handle into a closing yesterday at 157.70.80. The major reason that has been attributed to this is the fact that we've seen limited supply of flows into the market. Last week, the NNPC came to the market with $650 million, but that was bought by the Central Bank of Nigeria.
Right.
The flow didn't materialize into the market, hence the panic buy from the market and causing the Naira to weaken. We've also seen limited offshore supplies. There's been reduced interest in the Nigerian bond market, even though we see this interest in bits and pieces, but there's not been any significant amount, and that has also affected and contributed to the weakening of the Naira at the moment.
I think it's quite unusual to hear that the central bank is buying from the oil majors. I think the oil majors usually sell to the interbank market. Is this something that happens once in a while, and why do you think this happened in this case?
Well, this happens once in a while. It's not unusual. We see the central bank sometimes participating in this auction, especially from the NNPC point of view. So at this, the last one, the NNPC probably, I don't know, what I want to attribute to it is the fact that they probably got a better pricing from the central bank compared to what they got from the market.
Okay, and let's move on to this story around Nigeria being added to the Barclays Emerging Market Bond Index. Your thoughts on that? I really want to get your thoughts. I think broadly there is a view that is not going to be as significant as what we saw when Nigeria was added to the JP Morgan Emerging Market Bond Index.
Well, yeah, there was a story on Bloomberg and some of the international media around Nigeria being added to the Barclays Index from some Barclays person in charge of risks based in Singapore. The truth is, details are not yet out. The only detail we have is the addition, and to also say it's going to start sometimes next year. We don't know the particular part of the curve that will be included in the index, and we don't also know the weighting that will be given to this to the inclusion of Nigeria in the index. But what we've seen is that the market has kind of reacted to the news, especially the local players. We've reacted to the news, and we saw the yields on those parts of the curve drop. But again, as a business close yesterday, we saw also some risk off by the local players, and that led to yields inching up across the curve by an average of 10 basis points. But if you speak to the internationals, you find out that the Barclays Index itself, from the feedback we've gotten, is not an index that is widely followed. I think it's just an offshoot of the Lehman Index before the collapse of Lehman. Right. And if we look at the Lehman Index, we find out that it's more related to corporate bonds as opposed to sovereign bonds.
Right, interesting point you're making there. But of course, next week there's going to be a lot of news that will impact this financial market. On Monday, we should have the inflation numbers. On Tuesday, we should have the announcement from the MPC if there's going to be a rate change. I think most people are of the view that we're probably going to see rates where they are at 12%. Your thoughts on how the market is likely to trade ahead of that? And of course, I also have to add that we should see also some auctions in the Treasury bill and the bond market, right?
Yeah. Well, from what all the indication, next week is supposed to be an interesting week. The inflation numbers are supposed to come out next week. The market projection is still downward trend of inflation number. Despite all the flood activities that happen, we expect that in terms of affecting the numbers to probably start coming out in December. But for now, we still see a downward trend on inflation number, which is what our expectation of the market.
And how will that impact bonds in your view? Do you think the market is going to react to that?
Well, in my opinion, I think there's already risk on in the market, and even though there was a bit of risk off yesterday, I still think market is already reacting to that, and market players believe in terms of expectation that the inflation rate is going to go down. So people are already going long some of these securities.
And
in terms of in the MPC again, the expectation of the market is that is either the central bank is going to remain flat or they're going to do some easing. I don't think anybody at this point is thinking of some tightening measure. And if that happens, what I would expect market players to do is to also put some risk on and probably take it up from there.